I think the first financial decision that someone should make is to sit down with a financial professional, do a full financial needs analysis, taking into consideration what assets you have in place, what debts you have, the interest on those debts, the expenses outside of the debt that's needed to take care of you, and then making a decision not to panic and look at what other resources outside of what you see in your bank account and the expenses you see on those statements that come in. Look at the other resources that you have in place that can help you. Those resources are maybe you have some short term disability insurance at work that could be tapped into for a health crisis. Perhaps you have Family Medical Leave Act, some paid sick time, or some other time that you could take off, paid time off, that can help give you some time to get yourself, well. But then also look at your what life insurance contracts you have in place that may have living benefits. So oftentimes people don't know what living benefits are. Most of your insurance contracts, both term and permanent policies, will have living benefits attached to them. And what that does is if you have a critical illness such as cancer, or you have a cognitive impairment that prevents you from completing at least two of the six activities of daily living, you're able to take a tax-free advance off the face value of that life insurance policy. And that's what we call living benefits. I'll give you an example. We had a client late last year that had been diagnosed with cancer. Cancer, other than skin cancer, is one of those qualifying events that allows you to tap into those living benefits. And so this person had $1 million life insurance contract, and we were able to advance him half of that. He was the primary breadwinner for his family. So this allowed his wife to be able to still cover all of the expenses, but also take care of some of those medical expenses for his care
It's not covered.
that weren't covered by his health insurance plan.
Right.
And once he exhausted like those paid time off benefits where he received 100% of his salary and started getting 60% with the short term disability, she was able to make up that gap. So it was huge for his family in that she didn't have to worry about how am I going to pay the bills. She could focus on supporting him on his wellness journey as opposed to trying to figure out how to make up that deficit from his lack of income.